Hey guys, Derovic here. Thank you for joining me in this lesson called Pivot Points Exposed. Everything you need to know about pivots by myself. So, lesson contents. What are pivots? Then we're going to look at daily pivots, monthly and weekly pivots, when and why use pivots, how to use them, advantages, disadvantages, and finally the conclusion after all of this. So let's get started. What are pivots? Think of a pivot as one in basketball or in a different sport like football or soccer in Europe as it's called. It represents a point of reversal when you turn around, when you get to a certain point and then you turn around and go the other way. So pivot points provide one of the most popular indicators used in technical analysis today. It's also one of the more important indicators as well. It's mathematically calculated using the high, low, open and close prices. Now the close prices, these prices that it uses are from the previous period for calculating. Now stay with me. This previous period can be daily, weekly and monthly pivots. So if you're looking for daily pivots, then you would use the previous day's data. So if today is Wednesday, for example, we would use Tuesday's data to calculate today's pivots. Also weekly pivots, we use the previous week's data, and for monthly pivots we use the previous month's data. Now what we get from these calculations is price levels, sorry, which represent significant points of support and resistance. These are well respected levels due to a lot of professional traders taking some action around these levels. So whether that is closing positions, reducing positions, or adding to positions, any one of these would cause hesitation, maybe reversal, or some sort of a reaction around the level. Especially the more people that see these levels, the more reaction we would get. So moving on to daily pivots exposed. Daily pivots are usually composed of 7 main price levels, or these are the seven most common price levels, starting from the daily central pivot point, or some people call it pivot point, some call it central pivot point. I've called it central pivot point here, or CPP for short. Then we have resistance levels, 3 main resistance levels. We have R1, R2 and R3. R1 is the closest proximity to the daily central pivot, and then R2 is the closest proximity to R1, and R3 is close proximity to R2. Same goes for support. We have support 1 or S1, S2 and S3. S1 is the closest proximity to the daily central pivot, and so on. You don't need to know the formulas because they can be quite overwhelming, because there are so many. Most of the platforms offer plugins, at least, or they offer them for free. So you don't need to know these calculations, but if you're keen to learn them, I'm gonna go through them just in case you are. Let's have a look at the daily central pivot. So CPP is equal to the previous day's high plus the previous day's low plus the previous day's close divided by 3. Note we don't use the previous day's open price. This is just a very common way of calculating the central pivot point. I don't know why the previous day's open price is not even important, why it's not used. So I just wanted to mention that in case you want to do these calculations yourself. R1 is, so first level of resistance is 2 times the daily central pivot point minus the previous day's low. So let me repeat that, it's 2 times the central pivot point, so 2 times the price which we get from the initial calculation minus the previous day's low. And you can see R2 and R3 calculations as well. I'm not going to go through those. I'll just mention the support level 1 or S1 is very similar. It's 2 times the central pivot point minus the previous day's high. And you can also see S2 and S3 for your own pleasure. Let's move on. Moving on to weekly and monthly pivots. Um, these these are very popular pivot levels. They're called the weekly and monthly. Features of these pivots are that they represent very strong levels of support and resistance. They're watched by and used by the big money players, so they're very good for planning targets and reversals. They represent longer term trades. Longer term trades can begin and end at these levels. They're good for long-term trade planning and execution as well. And intraday, if you do happen to overlap one of these, that could represent a very strong level of support or resistance at which the price is very likely to flip. And that's it for weekly and monthly pivots. Moving on to when and why use pivots. Now, I use pivots personally in my daily planning routine. They help me identify intraday levels of support and resistance. You can use them to plan your entry and target levels. I do this all the time, every day. You can plan stop loss positioning above or below these levels. So if you're going short, for example, you would from R1 you would put your stop loss above R2, and same goes for longing S1, for example. You would put your stop loss below S2 just to be safe, because these levels offer good protection by market forces. So a lot of people are looking at these levels, especially the longer term levels like monthly and weekly. So they do provide very good protection. I mean, if they are to be broken, then that would take something pretty strong. So you can use them for that. Now look for overlap between the daily, weekly, and monthly pivot points for additional confirmation of support or resistance levels. For example, you can have the daily central pivot overlapping the monthly S1, for example. That would provide a very strong level of support or resistance, and you could plan some trades around there with high probability. The more elements, or the more indicators that overlap, the more people that see them, and the stronger the level becomes. So keep that in mind when you do your trade planning. Now, overlaps with moving averages also provide confirmation intraday. So look out for these too. For example, you could have 100 EMA on a 1 hour chart overlapping with the daily central pivot point. This is bound to have some sort of a reaction, a pretty strong reaction on the price. So you could look for those to plan your trades, to plan taking a trade in the opposite direction, I mean. How to use them using pivots. Here are a few examples of how to use these pivots. For example, if you're in a bullish market. Now, this is one thing I have to emphasize, that you have to establish what sort of market it is for the day. This is a very important aspect of trading. Even if you're wrong, at least try to establish whether it's trending or a ranging market, and if it is trending, whether it's bullish or bearish. So for example, this would cut out a lot of guesswork in terms of your trade planning for the day. So if it's a bullish market, outlook for the day, you would look for buy opportunities when price approaches, for example, the daily central pivot point from above, uh, and then you would buy at the central pivot point with your first target at the first level of resistance, or R1, and then the second target at the second level of resistance, or R2, and so on, third target at R3. Also, when price approaches S1, so when price drops down to support level 1, you would buy with the first target at the central pivot point, and then target 2 at resistance 1, and so on. In a bearish market, we would look for sell opportunities or short opportunities at central pivot point, for example. So if price just moved up into the daily central pivot point, then we would sell it there with the first target at S1, support 1, second target at S2, and target 3 at S3, and so on. When price approaches, so say we've started the day above the central pivot point and we've moved up to R1, and you're expecting the market to move down, this would be a perfect high probability trade to sell. So sell at R1 with the first target at the central pivot point, and target 2 at S1, and so on. So basically what you're doing is trading between the price levels, so central pivot point to R1 or central pivot point to S1, and so on, S1 to S2, S2 to S3, and so on. So if it is a ranging market, we would basically just buy when price gets down to S1 with the target 1 at to central pivot point and target 2 to R1. Also, when price got up all the way up to R1, we would sell with the first target at central pivot point and the second target S1. So we would basically just be trading between support and resistance. You could even trade between the central pivot point and R1 the other way as well. It just depends on the sort of day it is. But these would, in a ranging day, if price got down to S1, it would provide a high probability trade that it would go up to at least the central pivot point, if not to R1. So one thing to note is that markets range approximately 70% of the time, so it's very important to keep it in mind in terms of not expecting price to go in terms of targets that you set for your trading targets. So if it's a ranging day and you're expecting target to get to R3, this is the probability of that happening is very low. So what usually happens between the central pivot point and the first level above or below it is that the probability for it getting there is about 80 to 90%, but then that decreases from, for example, from R1 to R2. The probability decreases by about 20%, and then from R2 to R3 another 30%. So the probability of your trade getting to R3 is probably between 40 to 60% rather than anything higher than that. Especially on a ranging day, it would be even lower. So moving on to advantages of pivots. Pivots are excellent to use in ranging markets for price reversals, like we said, from S1 to R1 and so on. Support clearly defined levels of support and resistance. They're used by professionals in the market, so levels are respected. They're a great tool for planning intraday trades, for entry and exit points, also for placing stop losses. So if you, for example, took a short from R1, you'd put your stop loss above R2 and so on. So they give you a clear way to plan your trades. They're useful in trending markets as well, but as continuation or breakout type trades rather than trade reversals. So this is something you gotta bear in mind. I spoke about this earlier. They work well on all current currency pairs. And pivots are pretty easy to trade. I mean, they're visually represented on the charts once you use the various indicators that are out there, and you just trade between those visually presented levels, which are horizontal on the charts. Now let's move on. Disadvantages of pivots: they are difficult and time consuming to calculate. This is probably not even a disadvantage anymore, because so many platforms out there offer them for free, and if they don't, you can get some charting software that offers them for free and use that instead of your broker platform. So this is not really a big issue. They are based on past data. So for example, on a low volatility previous day, um, the levels that it would come up with would not be a good indicator for the next day. For example, if we have, sometimes Mondays are very low in terms of volatility, so the price range within that day, the high and the low, is probably about 50 pips, for example, whereas on a Tuesday or on a Wednesday it's 150 pips. So you can see how the difference in where the price levels are drawn is quite drastic between low volatility days and high volatility days. So in terms of that, um, that's something to be aware of going forward. And they don't take current price into consideration, which is basically an extension to what I just said. If it's a higher probability day, higher volatility day than the previous day, then we cannot pay too much attention to the pivot points. And conclusion: pivot points provide very powerful tools to help you plan your trades. Make sure you learn how to use them to your advantage and plan your trading around them. They will increase your profitability. If you use them correctly, they definitely will. And I wish you guys happy and profitable trading. Do drop me a line if you think I missed something out, or if you find this useful. I will appreciate it. Thanks again, and happy and profitable trading.